Do you want to invest but just found out you need a brokerage account to get started? Well, if you're a beginner and don't even know what a brokerage account is, keep watching this video, because not only am I going to tell you exactly what a brokerage account is, I'm also going to tell you what the difference is between a brokerage account and maybe some other accounts you may have, along with all the pros and cons you should know about brokerage accounts before you actually open one. Hi, I'm Nicole, one of the Wealth Twins. My sister and I teach others how to manage and invest their money with the ultimate goal of financial independence. So if that sounds good to you, consider subscribing to the channel. Now let's get started. Now before we get into actually what a brokerage account is, it may be helpful to understand what a broker is. A broker is anyone that acts as a middleman between buyers and sellers. A broker will help negotiate deals and also match the buyers and sellers together so that these deals can take place. Originally, financial brokerage companies were the brokers for people who wanted to buy and sell securities, such as stocks and bonds. Just like you would use a real estate broker to help you buy and sell a house, you would use a financial brokerage company to help you buy and sell securities, stocks and bonds. The reason why brokerage firms are important is because they make it easier and more fair for everyone to invest. Brokerage firms give people more opportunity to access markets where they can grow their money and potentially become financially secure. Not only can anyone buy and sell stocks and bonds on their trading platforms, but a brokerage company also offers services like financial advice and also tools for market analysis and research. Overall, the creation of brokerage firms has made it easier for anyone to invest in financial markets and also participate in the global economy. Brokerage firms like Fidelity have made it possible for anyone to get access to fair pricing and a variety of investments regardless of money, connections, or personal background. Now, what exactly is a brokerage account? Think of a brokerage account as a specific type of savings account that you use for investing. The goal of your brokerage account is to invest in things such as stocks and bonds, like I mentioned earlier, but not only that, you can also have the chance to invest in mutual funds, index funds, and exchange traded funds, also known as ETFs, with the hopes of growing your money over time. It is not an account that you use just to park cash. It is for investing. Now, when it comes to how many types of brokerage accounts there are 5 main types of brokerage accounts. You have the individual standard brokerage account, which is for one person to buy and sell investments. You also have the joint brokerage account, which is for 2 people, usually a married couple, to buy and sell investments. You have a custodial brokerage account, which is an account an adult will open to invest on behalf of a minor. You also have a retirement account. Think of a traditional IRA or a Roth IRA where you use this brokerage account just for investing for retirement purposes. And last but not least, you have a margin account. A margin account is a brokerage account that allows you to borrow money from the brokerage firm so that you can buy investments. This is a very risky type of account, and I do not recommend it for beginners. It's very important to choose the right type of brokerage account for your investment goals, your financial situation, and your risk tolerance. It's also very important to review the fees and the commissions associated with the account that you choose. When you want to open up a brokerage account, you go to a brokerage firm. Now, there are 3 types of brokerage firms: a traditional full service, a discounted brokerage firm, and also an online-only brokerage firm. When it comes to traditional full-service brokerage firms, these guys offer a full range of investment services, including financial planning, investment advice, and more. Examples of full-service firms would be Morgan Stanley, Merrill Lynch, and Charles Schwab. Now, when it comes to saying Charles Schwab, forgive me if I mess up the name. I always have trouble with that last name. Discounted brokerage firms offer lower fees and commissions, but may not provide as much investment advice as you would get at a full-service firm. Now, some examples of discounted brokerage firms are Fidelity and E-Trade. When it comes to online brokerage firms, they also might offer you lower fees and commission than traditional full-service firms. However, these firms operate totally online. Now, examples of online brokerage firms like this would be Robinhood, Webull, and also Vanguard. When deciding between these different types of brokerage firms, there's a few things to consider. You should consider what type of investments you think you'll be making, the fees and commissions that they charge, and also any other feature or services that you think is something that's important to you, such as maybe you might want a brokerage firm that offers check writing or the ability to trade options. Now, you may be asking yourself, why would you need a brokerage account if you have a retirement account? Well, that's because a standard brokerage account is for investing purposes to earn a return, while a retirement account such as an IRA is specifically meant to save for retirement. The main difference between these two accounts can be summed up in three ways: the way they are taxed, the withdrawal rules surrounding the accounts, and also the contribution limits. With the standard brokerage account, you pay taxes on any earnings you make as soon as you make them. With an IRA, on the other hand, you can avoid paying taxes on your contributions and your earnings until you withdraw that money during retirement. Withdrawals from a standard brokerage account can be made anytime without a penalty. With an IRA, there are rules regarding when and how you can take out money so that you don't get charged penalties and taxes. IRAs also have contribution limits and specific rules about who can contribute and how much. When it comes to a standard brokerage account, that is not the case. Overall, an IRA is a good choice for anyone who wants to avoid taxes and save for retirement, while a standard brokerage account is better for anyone who wants more flexibility in how and when they want to use their money. Now, if you're not interested in retirement accounts, but you still want to know why would you want a brokerage account over a savings account, well, here's the difference between those two. A savings account is a bank account that's meant for you to save money for short-term goals, emergencies, and other expenses. Savings accounts are generally low risk, offer low interest rates, and are insured up to a certain point by the FDIC. This is meant to protect people who put their money in a bank in case the bank fails. On the other hand, a brokerage account is an investment account where you invest in things to hopefully have a higher return than you would at a traditional savings bank. Now, because you're looking for a higher return, that means it's more risk. And because you're investing in securities like stocks and bonds or ETF and index funds, your money is also not guaranteed in a brokerage account. Brokerage accounts are not FDIC insured, so there's no guarantee that you will not lose all your money. In summary, a savings account is a low risk, low return account designed for short-term savings goals, while a brokerage account is a higher risk, higher potential return account designed for long-term investment goals. Now that you know the difference between a brokerage account, a retirement account, and savings account, it might be good to go into the pros and cons of having a brokerage account. The first con with a brokerage account goes back to investing. When it comes to investing, there's always some type of risk you have to accept. And when it comes to your investments, the value of your investments can go up and down depending on the market. If you're not comfortable with accepting risk, maybe a brokerage account is not what you need. Another con when it comes to investing in a brokerage account is fees. You want to make sure that you keep your fees as low as possible because fees eat into your return that you're trying to make when it comes to investing. So it's important that you look and understand the fees that you're being charged before you start investing. The third con when it comes to a brokerage account is limited access. Remember, not all brokerage accounts are created equal. You might be in a brokerage firm that has limited access and not allow you to invest in all the investment options that are available. This can be a problem if you're interested in investing in a specific company or industry, so keep that in mind when choosing a brokerage firm. Another con would be no guarantees. Like I mentioned earlier, there's no guarantees when it comes to the money in your brokerage account. It's not like a savings account. It is not FDIC insured. So if your investments go down, it could go down to a point where you can lose all your money because there's no guarantees because you're dealing with the markets. But that's the risk you take in order to get a higher return than you would putting your money in a savings account. Another con that many people might not mention is when it comes to a brokerage account, there could be information overload. We're talking about investing here. There's so many investment options out there that are available, it can be overwhelming trying to understand what to actually invest in. It's important because of this to do your research and choose investments that align with your financial goals and your risk tolerance. Don't just invest in anything you can just because it's offered through your brokerage firm. Although I mentioned some cons, there are tons of pros when it comes to opening up and having a brokerage account. Number one being the opportunity to have the chance to make a lot of money. If you want to make a big jump in your wealth and in your net worth, you cannot do that by saving alone. Another pro of choosing the right brokerage account is the level of customer service that you can get. Full service brokerage firms can offer you expert advice and again, those research tools that you can use for market analysis and researching the investment options that are out there. These things are very valuable and most of them come free just by being a customer with that brokerage firm. Another pro when it comes to having a brokerage account is that it's easy and flexible. You can open a brokerage account with a small amount of money and you can buy and sell investments all throughout the day. This makes it easy for you to invest and lets you control your money. Not only is a brokerage account easy and flexible, it can also save you money on taxes. Remember, a retirement account is a type of brokerage account. And last but not least, the relationship is clear when you have a brokerage account. Brokerage firms are required to tell you how much they charge for services so that you can make better investment decisions and don't get caught out there with surprises. Remember, every investor and every type of brokerage firm is different, so it's important to carefully consider the potential benefits and risks before opening up a brokerage account. So do your own research, consider your financial situation and goals, and educate yourself on different financial firms so that you can find the right brokerage company for you. Also, don't forget, you need a brokerage account in order to invest in the stock market. If you want a chance to grow your money faster and also build your wealth for you and your family without the limitations of a retirement or a savings account, you need to open up a brokerage account. If you enjoyed this video, show this twin some love by hitting that like button and watching the next video, which is right here.